Hey, Martin, how are you?
Hi, hi, Avi. I'm laughing because
What's up?
there was a sign that you gonna record the meeting, and then I had the options to just leave or to join, and that was so funny for me. Oh no, not for me.
You hit the wrong button.
Yeah,
All right, all good. Well, you're here. Sorry for the delay to sort out my kids, but all good. We're here now.
Yeah. I make you a little bit louder, no problem. Yeah, thank you for having me. Really appreciate it, and I really mean it. And hopefully it won't take that long. I have prepared some questions, and I'd like to discuss some of my last trades, what I think, and what you think about it.
Okay.
Yeah.
Sure. Let's have a look.
Okay, wait a second. Okay. First of all, the first question is about risk management, because we know this is the one of the most important things. And if I just want to have your opinion about it. I have a 5,000 euro account, sim trade, and when I'm green over and over for some months, then I will take the similar amount and do real trading. So the baseline is for me 5,000 euro, and I'm trading with it on the sim to get used to the numbers, and then make it in the real. So my approach is I'm taking every time per trade 100 euros. If this is equals to 2% of the account, and I go with this size every time. So when I say I want to enter here, I go to not the amount of stocks, etc. I go 100 euro. I want to risk.
Mm-hmm.
Yeah. And this is how I trade at the moment. And this is the first question. What do you think about it? Does it make sense? Always have the same amount of dollar, euro in risk, or to divert?
Yeah, it makes sense to go with equal risk per trade. Just keep that very simple.
Yes.
So, same risk per trade. That's it. And you're in the sim, you plan to go live. That's all right. You're trying to get used to the numbers, but just remember, when you go live, make the numbers smaller than what you've done in the sim.
Okay.
Because going live brings in a whole different dimension of emotions that you have not yet experienced. So go small, go slower, so those emotions are not too intense and destroy your thought processes.
Yeah.
So that's a big transition. But for now in the sim, yes, definitely practice with the equal risk per trade. Very good way to go. Keep it very simple.
Yeah. Is this what you're also doing, or are you much more flexible, or do you have the same amount in every trade, or?
These days, yeah, I'm closer to the same amount risk per trade. I used to do it differently. I used to go dynamic risk when I was doing options. And I'll probably go with more dynamic risk again a little later, probably in a few months from now. But that's because I've got different kinds of setups, different kind of complexities. I'll be adding into positions and all kinds of things.
Yeah.
So that's a different way. But just getting into the game, just figuring out trading, simple, equal risk per trade, and don't make it more complicated than that. There's other things you really need to focus on. So let this be already settled and easy. You don't have to think about it.
I follow you for various reasons, and one of this is 80-20. I want to make it simple.
Yeah.
I don't have indicators. I want to have simple risk management. I'm watching buyers and sellers, or some levels, and that's it. And as I said last time, I even go grocery shopping when I have in a trade, but that didn't work out. But that's the game. I know. Just having fun. Another question, and the next questions I have here, most likely we will see in the trades, because it's maybe abstract. 2 large candles equals no entry, because the risk reward is not that good. How do you define for you, for yourself, if it's too large? Do you go by some numbers? Do you eyeball it? How do you do it?
So see, that's a matter of momentum trading. When you're momentum trading, you're looking at these candle sizes and the pace of the move, the speed of the moves. And when I used to do that, I just eyeball it because I had plenty of experience already looking at price action. But to take a step back from that, momentum trading is generally something I don't recommend to most people, especially in the early days of your trading journey. And also, I mean, nowadays I don't even bother with it because there's easier ways to do trading. You don't need to bother with momentum. It's just, it's more about getting excited and having fun. That's momentum trading, which most people just blow up and go buy other courses and all that stuff. So don't waste your time with it. Forget about those two large candles and all. What you really got to look for is, if you're doing the naked trading stuff, just look for the key levels. Make sure the price gets to that area of the key levels that you have on your charts, and then wait for those setups. The simple one, break and retest, or if you're looking at reversals, you got the double bottoms, double tops. You got the kangaroo tails. Just look for those very simple candle setups, and then the new high or the new low. That's the entry. The whole trade book. That's all you need. Forget about anything to do with momentum, because that is going to become whole new world of complexity. There's a lot of subjectivity in momentum. And is this a large candle? Is this a big move? All that stuff. It gets unnecessarily complicated. And again, it's very hard to keep it objective. Very hard to keep it black and white. So don't waste your time with that. Just ignore it. Focus in on the setups, the naked trading setups. Very easy, very straightforward. Don't need much else.
Yeah, absolutely. But and sometimes I see a double bottom, but the candles are huge, and then I don't know. Probably I shouldn't enter because the risk reward is sucked.
See, most of the time, if you just look at the risk to reward side of things, that'll keep you out of a lot of bad trades.
Absolutely.
The risk reward's not there, so your trading will drop by 80%. You'll take 80% less trades just because the risk reward is not 3-to-1 or 5-to-1 or something. That's good.
But this is very important because I experienced this the last days, and I want to talk to you about that, because when I hear it on when you talk about it or someone else on the internet or whoever it is, it's just words. But when I experience it and say, "Ooh, wow, this is that move," and it's barely 3-to-1, not that good.
It's not that good, and really. Again, be careful with the internet because people will share their winning trades. And if you look at those trades, just actually look at them. Where was their stop and where was their target? It's barely 1-to-1. Most of the guys on the internet. And you'll find once in a month they'll share some trade like that, because once in a month is the only time they actually win. They lose 100 other trades, and then they make money on selling scams on the internet.
This is no problem for me. I don't care about what people post. I barely look at it. I have my own journey. I just hear what you say, and then I try to make the best out of it. Because when I take another one person and he says this and he says that, this is rubbish.
You gotta think for yourself, for sure.
The next question, but I would think it's best we see it in my trades. I will show you. Where would you put your stop loss? And you will always look, just to make it clear, 30 minutes, and then you go when you see a setup there, a double bottom, a breakout pattern, or a retest on your level, and then you go into the footprint and look for a tiny entry, and then of course you take the stop loss according to this and not according the last maybe bigger candle in the 30-minute, because then we talk why we look at the footprints, because we want to make our risk reward small, right?
So that's the thing. You're mixing up two different things here. One is the footprint charts, and the way that I'm using them is very different from all the naked trading stuff that I've done in the last 2 or 3 years. You got to treat this as something different from naked trading, because what I'm doing with the footprint charts is I'm using a 1,000 tick chart, and then I'm overlaying the footprints on top of that. So it's a bit of a Frankenstein creation, something I just created, and I like it. So I'm using the 1,000 tick charts for levels, and I'm using the same charts, but the footprints on it for the entries. So it's something quite different. If you're talking purely about the naked trading stuff, That is where, as you said, the 30-minute chart first, find the big picture, find the big levels, and then zoom into the 1-minute chart, not footprints. No footprints involved in that.
Yeah.
Just a simple 1-minute chart with the naked trading stuff, and then you get your entry on the 1-minute chart with the stop loss closer, because the 1-minute chart candles are smaller than 30-minute chart candles. Yeah. So that's how I'm doing it.
Yeah,
that's a simple way to do it. So you gotta, at least from me in my head, there's two different styles of trading. One is naked trading, the other is footprint trading. Right now I'm doing footprint trading. I'm working on it. So don't mix them up. Well, you can try and mix them up, see how it goes for you, but I don't mix them up.
But just to make sure, you start from the 30 minutes, or is it also gone? Only footprint?
I'm just looking at one chart nowadays, only one, the 1,000 tick footprint chart. Everything I need is
okay. Okay. Then I mix it up. Sorry. Okay. Yeah. And this is also, of course, very, very nice, because my last trade today didn't reach my target, which is okay. But if you can understand, I'm new to the game, and then I have a question, of course, myself. Was it too far? Was it? Yeah, I don't have the experience. That's why I want to talk to you and discuss with you. Where would you put your targets? I mean, it's obvious, but maybe we will see it on my trades. I will show you, right?
Yeah, we can look at it on the charts. It's very simple. But basically, the bigger picture is, once you pick the target, before you enter the trade, you got to know where your target is. So once you have that, you enter the trade, you put the stop, and then it starts to go. And then you end up closing the trade. It never got to the target. It stopped you out, or you took a break even, or whatever. That's fine. Doesn't mean you're wrong. Just because that happened once doesn't mean you're wrong. Now, if that happens 20 times in a row, then there's probably something wrong with your targets or your time frame or something else. Then we'll look at that.
Sure.
But don't ever doubt yourself because it didn't work one time, or didn't work 5 times even. That's not even enough. Maybe even 10 times is not enough, because a lot of times you'd be wrong 10 times in a row. But you're still doing the right thing. You could lose 10 times in a row by doing the right thing. That's what I'm trying to say. That's very normal in this business. So you really got to get used to, again, putting in a lot of attempts and losing a lot of attempts, and you only win a few. And if you can really accept that kind of existence, then you'll be okay in trading.
Yeah. In my logic thinking, it is absolutely clear. When it happens over and over again, it creeps in, and then you doubt things. But I know I'm not at the very start of the journey.
Yeah, good. You're learning this. This is good. These are important things to learn early on.
Yeah,
the resilience, all that. Yeah.
Okay. How about I give you my chart on TradingView, give it free, and we look together at it?
Yeah, let's do it.
Okay. This one. Okay, you should see my chart now.
Yep, I got it.
Okay, perfect. As you can see, futures, only futures trading. Before I was in stocks and other things. But I have a Ninja Trader doing the sim, and yeah, took some trades, and I just marked it so that we can discuss it. It's only a few. This are potentials I want to discuss, and these I took, and this one. So pretty straightforward. Let's start with this. This is very funny to me, because you took it long and I took it short. And for you, that's what we discussed in the last online session, and that was very nice input and new for me. For you, this is like a breakout, right here.
Yep.
And then it's obvious it's an ABCD pattern, right?
Yep.
And I saw it differently. I didn't know about this, because this, of course, makes total sense. But I'm a beginner. I just saw resistance here. So this big candle comes back, builds this big candle, and I thought, oh, okay, this is weak, and when it comes back and don't reaches the top, I'm gonna short here. This was my thought process, and we can look in the 1 minute chart. We find it. Yes. Yeah. The 1 minute chart is pretty choppy when I see it like this. Yeah. Yeah. It's funny when I show you this, I think to myself, okay, what is this?
Yeah.
but when you are in it, and it makes it goes up, makes this lower low, and that doesn't reach it, and it goes down. My thought process, because I only see this, right, is this is a double top, and it confirms what I just saw with the big off selling, and it doesn't go all the way back. And I know from you when there's a big candle and it tries to creep back, and it doesn't reach the point where it breaks out, then you can short it. And didn't work out. So okay, now you.
Yeah. To make it very simple, you're way too zoomed in.
Okay. Yeah.
You gotta zoom out, man. You gotta really zoom out. Yeah. I mean, maybe even the 30-minute chart is too small. For some people that makes sense.
Yeah.
But if you just look at this 30-minute picture, you have the previous day's high. It's pretty much there, or even a little below during the New York session. But that's the high. And then it went up, it gapped up above the high. Think of it as it went up so fast that you can't even print a candle.
Yeah.
That's massive bullish activity. And the rest is nothing more than a pullback and reclaiming that high, and then look at that, off it goes. It's massive. So here's one thing. Go to the daily chart. I'll show you something.
Daily?
Yeah, daily chart. All right, let's get into that area where that activity was, that day's high.
Yeah.
Zoom in a bit more there. Can't really see it. All right. So if you look now, the day's high that we have looks like it was the 16th of March.
Sorry.
That's right. You see the 16th of March, I think, is the day we're looking at.
Yes.
Yeah, that's the high, right? You see the high of that day. Okay. Now, what's interesting is the day that we're talking about, you can see where it opened above the previous day's high. Right?
Yeah.
And then it came and interacted with the previous day's high. Now, this is very interesting because you got to think of, let's step back a bit. When you're thinking of a day's high, you're thinking about resistance. That's as high as it went. And in this case, it actually even dropped down from there. Right? And it closed a little lower. And if you look at the day before it also, look at the high, it's basically in the same place. So you can see there's a massive resistance line right there. Okay, lots of selling right at that precise level, that area. And then when it finally gapped up and broke out of that massive resistance, then my head straight away thinks, okay, breakout and retest of the breakout.
Sure.
And
if you see, if I look at with this, sure, absolutely.
It's a very simple chart. That's why the daily chart is easy. So a lot of people have this problem where, they get into a time frame and it's just too zoomed in. For me, the 30 minutes seems to work. I've used it for many years and it's always been okay. It's not too zoomed in, not too zoomed out. For me, it's a balance. But a lot of people use a 4-hour chart or an hourly chart or a daily chart. We have Sujit who looks at the monthly and weekly charts as well.
Sure.
Some people look at a 15-minute chart, and that's not too zoomed in or too zoomed out. That's balanced. So for you, perhaps the 30-minute is a bit tricky. Maybe just zoom out. This is the daily chart, and you can see on the daily chart, it's very easy to see where you have consecutive wicks, and it's an absolute day or high or low. That's a key area. And then right away it just jumps at you. Put a line there, and then when the price interacts with that line, then you look at it. Oh, is it a breakout and retest? Most of the time, that's what it is.
Yeah.
And you're basically looking for that. You're not looking for reversals. You shouldn't be looking for reversals. They're just too complicated.
Yeah. This is also a nice topic. When I watch myself trading, I always look at the opportunity. When does it turn around? Instead of, okay, when gives me the sign to continues? Because as you always say, most of the time it's doing what it's doing, and it's when it goes up, it mostly continues.
Yeah. So you have something like this, and you look at a daily chart, the market closes, then the market opens. And if it opens with a gap, well, you basically already start having a bias to go in that gap direction.
Sure. Okay.
So you can really narrow down your trading. You don't have the possibility of going the other way. You're just only looking in one direction, which already, again, like I said, avoids a lot of over trading issues. So again, to me, in my eyes, this is a very simple case of identifying resistance levels. Like there's this one resistance level, and then it broke out above that, through that.
Yeah.
And it simply bounced up and went from there. Bounced off it, bounced off of the area and went.
Yeah.
That's
yeah, absolutely.
That's exactly why I took that long. It was the same thing.
Yeah, absolutely. Makes total sense. I just make this a little bit bigger.
Yeah, there you go. See, I'm able to see it on a 30-minute chart. You can see where it's resistance in pretty much the same area of that previous day's high, just about there, yeah.
Yeah.
And sure enough, it came in, dropped, and just dipped in below that, and then below that, it started making higher lows. That's a sign for me, just looking at naked trading, that's a sign for me telling me that the buyers are stepping up and up and up. And sure enough, yeah, they got some momentum and off they go.
Yeah, absolutely. As you said, I was too zoomed in and just focused on the bearish candles.
Yeah, so even on a 30-minute chart, I mean, the way you've got the zoom right now, I think this is good. Even when I look at 30-minute charts, I tend to look at it like this. I don't zoom into like just looking at 5 candles. It's like, it looks like I look at 2 or 3 weeks in one screen on a 30-minute chart. Maybe just get used to this kind of zoom, or go into a bigger time frame, a daily chart or something. You can pick, and get a bigger perspective. Don't zoom in so much. I mean, whoever told you about 1-minute charts, that guy did you a disservice. Yeah. Don't look at 1-minute charts. So there you go.
Very often I have troubles, as I also already told you. Having, this is maybe an exception, but a lot of the time when I see setups, I'm right with the direction it takes, but I get stopped out not only too much times, because I don't re-enter till we discussed this. This is simply normal to re-enter if the setup is still there, and yeah, it goes in the direction I thought it will be, will go, but without me. Okay, so this was very helpful. This one, too zoomed in. I get it. The next one is, this is later. MNG, yeah, this was today. Let's look at this one. So when we see this, for me there was support in this area, and it consolidates, and then it's put in this yeah, kind of double bottom-ish pattern. And I was yeah, long biased and took a trade. This is a 5 minute. We go into 1 minute. Let's see. This was something, an attempt. I think we'll. No, this is. Yeah. Yeah, this was the double bottom-ish. Yeah, I got long here. It went a little bit, and then it stopped me out. And I this is the point with a stop loss. When it goes like here, is it smart to move the stop loss here, or?
Well, to begin with, just on this picture on the 5-minute chart, do you see a double bottom here?
To be honest, no. But because this is one, this is something, and this is a no. It's
a choppy
kind
mess.
of Yeah.
It's just sideways. So just
Yeah.
because you may see something on a 30-minute doesn't mean you just jump into a small time frame and take a trade.
Yes.
For the fractal pattern, you've got to see the setup on both time frames.
Yeah.
So if you see it on the 30 and you don't see it on the 5 or the 1 or whatever you like, don't take it. There's no trade here. This is just a choppy mess. There's nothing here to look at.
Mm-hmm.
It's perfectly sideways. It doesn't want to go anywhere, and it's telling you that.
Yeah.
So you need confirmation again on both time frames. Otherwise, don't.
Yeah.
Yeah.
So when we see this is not enough for a decent double bottom, it has to make a much bigger arch.
Look at it earlier when it first came down. It was in that downtrend, just here on this chart. Came down, then it pushed up, and then it got down low deeper. Right, lower low. That already negates the double bottom. There is no double bottom there. So it made one bottom at first, and you got to understand the context.
You mean this one?
Yeah.
Okay.
Because you got to understand.
This is interesting. When it makes like this, you wouldn't trust it if it makes a bow like this.
Forget about it. No way.
Okay.
No way. You got to understand context. The double bottom, it has to happen at the bottom of a downtrend.
Mm-hmm.
Not in the middle of a sideways activity or something like that. So this thing came in a downtrend, and at the bottom of the downtrend, it made a low that went up, and it made a lower low. That negates the whole double bottom. That's exactly the whole point of the double bottom. You want it to make a higher low to show you that the buyers are taking charge and pushing upwards.
Sure, but we can have one here.
No, we can't. You're skewing the concept, the context.
Okay.
Skewing the whole context. Context is very important. Otherwise, I see 10 double bottoms on this chart.
Sure. Yeah.
What's the big deal? We can see them everywhere. Look, we made another bottom, another bottom, another bottom. You can see 10 bottoms.
Okay.
What's the big deal?
Yeah.
So context. You're doing naked trading. You need context, and you need the fractal patterns. You got to put it together. Context is important. Again, that's what if the details are actually really well written down and described in the strategy videos on naked trading. And Jill has got some good documents out in our forum where he put down the step-by-step of what are the elements you need for every one of these naked trading setups.
Okay.
Context is a key in all of them.
So first thing is it has to have a clean offsetting till it gets to the point where buyers step in, and then they step in, they get overwhelmed by the sellers, but not to the point and obvious and clean. Otherwise,
exactly,
we trash it.
Yes, exactly. But again, I suggest review some of the. I think there's 2 strategy videos I put. Each of them are like 5 or 10 minutes long. You can get the details in there as well as the documents where they're written down and well labeled. So,
yeah, the videos. What's the name of it that I can find it?
Just go to our channel, our YouTube channel. Look at the strategy videos playlist.
Yeah,
a strategy playlist or something. Strategy videos. You'll see them in there, and you'll see examples of what they really need to look like. Real life examples.
Then this I took it. Today, the chart went up, and then I thought when it bounced here twice, I thought of an ABCD pattern, and then maybe I take 5 minutes for better. So. I don't know. This is a 5-minute double bottom-ish. I saw this and I was too late and made something here. But then, I got in here. Right. It bounced back to this area and shoot up, and I entered here. Then it consolidated here. I brought the stop loss here. And was break even. Yes, and then it went 7.5 hour, I thought, and yeah, no luck, I think. But maybe you see this whole different story.
That's all right. So on this 5 minute, I identify that same double bottom. You can see it had a nice downtrend, and then you see the double bottom where the second one is higher than the first one. There's a little space in between them too.
Yes,
that's a decent looking double bottom. But go back to the 30 minutes. So let's say on the 5 minute, you have the setup. It's there. On the 30 minute, what setup did you say? ABCD?
I would say
I don't see it.
like this.
So on the 30 minutes, it's not there. So to put it very simply, when you're looking at naked trading setups, there actually isn't much of an ABCD pattern. That's a bit of a, it's been popularized, but it's not really there. For naked trading, when you're looking at a continuation pattern, so when it's going in one direction, then it consolidates and it continues. During that consolidation, you want a long tail hammer. Again, that's also back to the context. Same thing in the strategy videos and the documents. It's very well labeled where you really need that long tail hammer with room to the left, and that's the continuation setup. Different from the break and retest setup, even though people get that mixed up. It's not. It's not. But over here, you can see there's nothing. It just went up and then it got choppy. It didn't give you any signal, long, short, or anything, which means it's just sideways. You can see that here. So really what you want, again, is go in one direction and then go sideways. And during the sideways time, you want a long tail hammer that sticks out of that consolidation. So there's room to the left.
Sure. So this isn't enough that it bounced here and went up and bounced again. So when you zoom in, of course, you can always zoom in. In 5 minutes, we have a double bottom, but here there's nothing. You want here an hammer.
Yeah, but you see already there, it's already dropped from previously, from the high. It already dropped. I don't want it to drop so much when I'm really looking for a continuation pattern.
Okay, so
it's going sideways. This thing already made a move down. It's different. It's two different things. So there's really nothing going on here. No setup at all. I don't see anything. So again, you want to look at the continuation setup and what that needs to look like. It needs to go in one direction and then consolidate. And during consolidation, you want a long tail hammer, which sticks out of the consolidation. And then the entry, then the setup is there. Then you go for the small picture for the entry.
Okay, I will look. We'll look it up again.
Yeah, that's the continuation setup. And be careful with natural gas. I'm not sure it's a ticker we really should be trading.
Yeah, it's the when you go into the 1 minute, it's crazy because you have gaps everywhere.
Yeah,
but
so I've been looking at these tickers and I don't find them useful for trading yet. I haven't found a way to trade them.
Yeah, in my eyes, I saw a double bottom here, and then I don't care what's the name of the ticker.
Well, once you take care of which tickers you should look at, then don't care about the others. And I'll give you a few, just very simple ones. You know what? Just look at MES and MNQ. Those are the easy ones. I mean, I'm looking at a few other exotic things, but those are a bit complex. So let me look here. MES and MNQ are the obvious easy ones. You got gold, silver, oil, all that stuff. But, none of this stuff is really regularly worth trading. When you're looking at futures, I'm trading them because I'm looking at footprints and a few different things. So I think to make life easy for you, just look at two things. MES and MNQ.
Yeah. So I trash the rest.
Yeah. Don't look at them. Just don't. They're going to confuse you, I think.
Okay.
Yeah.
I will trash them after I show you the next trade. Yeah.
Yeah, they have yeah, sure. Yeah, these other tickets, they have different dynamics at play. They're heavily volatile. They're not always in play. They're based on the news. You have energy stuff. You have resources, commodities. This is a different ballgame. Really different for what we're doing here. So focusing on the MES and MNQ, I think start there, and then build from there. And there's plenty of setups every day on both of those. It's crazy.
What's about the Dow? The MYM?
That's the Dow Jones. Don't bother. You'd be looking at it for a long time before you even get a setup. Okay. So I think MES and MNQ covers 80% of everything you need, especially now when you're trying to really learn what a setup needs to look like. And it's good that you can, you find them here. And also what's good is when you see that there's two tickers and you don't see a setup on any of them, then you just have to wait until a setup shows up on either of them, which is so then practicing patience, which is very important in the market. Because if you have 8 or 10 tickers, you don't see a setup on one and you start cycling through all your tickers, by the time you get to the 6th one, your eyes will see a setup, whether it's there or not. That kind of bias, confirmation bias almost. You want to be careful. You don't want to get lost in that. That's why having a very small watch list is really good in your trading, especially in the beginning when you're trying to learn what is a setup. How do you identify what the context is? What's a key level? What's room to the left of the long tail hammer? What's a breakout retest? What's a reversal supposed to be? You take the patience to observe them as they happen. And I'm telling you, they happen every day. On MNQ and MES, you'll find maybe 3 setups, 4 setups every day.
Mm-hmm.
A lot of days you'll find even 5 setups a day. It's not a big deal. There's plenty.
Okay. I will go ahead. Last one, this one.
Mm-hmm. Forex.
The Forex one, yeah.
Oh,
this was again double bottom to me with a hammer. So
yeah.
So I zoomed in and tried to took it, but this was before you said no problem. The setup is still there. You should enter multiple times. Yes, there we go. This was the thing we discussed with Nina.
Yeah, I remember this yesterday.
And I didn't re-enter here, so
yeah,
it's just okay. I should have entered one more time and then maybe here and wait till this pullback, and then I can go break even and watch it, right?
Yep, there you go. This is actually a good example of what to do. But again, don't do it on this ticker, but when it looks like this on the other tickers, on MES and MNQ, this is a decent setup.
Absolutely. So, okay, then we have only left what I eyeballed and want to discuss. I think, yes. These 3 areas. This is again a gap up. So like with a MES, I think it's the same day because they move quite similar. Came back and then got up, made a wedge, and then it broke out, right? So would you potentially take it or get interested here?
See, on a 30-minute, as the breakout begins to happen after that wedge, then I would zoom into the 1 minute and see if it gives you a break and retest setup.
Do you mind logging in?
Yeah. So did it give you a break and retest setup? So it broke out. You can see it never came back and retested the breakout.
Absolutely.
So leave it alone in that case.
But this is the 5 minute. Maybe we find some here.
Nope, still not there. So this one just wanted to break out and go. Did not give you a retest. So leave it alone.
So it's pretty easy. No retest, no trade.
Yeah, simple as that.
Yeah, don't force it. Yeah.
Because breakouts are very often false breakouts, right? And it gets very tricky to pick them, and you gotta have a wide stop. So it's not in your favor.
Yeah. Always nice to hear this the confirmation. Would you take this one? It's double bottom-ish, double top-ish. Consolidates and then breaks out maybe of this resistance, or it's when I see it like this, and I would say, okay, this is the double of this tiny consolidation. Maybe it's very zoomed in. Would you take it short, or is it?
Yeah, I would. See, on a 30-minute, this is firstly, it's not a double top. When you look at a double top, you need to have an uptrend, a genuine clean uptrend, and then make a double top.
I mean, this one.
Yeah, that's not a double top because it doesn't happen after a nice, clean, neat uptrend. It was a bit of a burst upward, and then it got choppy.
Okay.
It burst up, and then it came down, and then choppy, but then it burst upward again, and then it consolidated and dropped. But yes, where you've got it circled there, that looks like a consolidation leading to a breakout. That's useful. I might be interested in something like this. So again, but when you have a consolidation, you have to identify what is the high and low of that consolidation. So you identify what is the potential breakout area.
Yeah.
Right? You observe the breakout, then wait for the retest. And I would do something like this. Yeah.
When I see it, I would say this is maybe the bottom of the wedge.
Yep, that about looks right. And yes, you have lower highs on the other side of it, so you can get the idea that it could break to the downside. So after it starts to break out, then you zoom in and find that retest. If you get it, great. And pretty obvious lower down.
Just let's look at it for it if it's nice. So it broke out. Doesn't come all the way back, but.
And then firstly, from your level, the first time it broke out, it was a false breakout. You see that?
Yeah, absolutely.
Yes. Okay. And then you have the breakout that happened a bit after. Now, what's interesting is when it did do the breakout, you're looking for the retest. Now, look at this retest. It did not actually go and retest the whole breakout, the bigger picture that you've got, the breakout area, but it retested the more recent low, the false breakout low.
Yes.
See that?
Yes,
that's interesting too. That's where I would also look at it. Yeah. If I can identify the retest there, I'll take that one.
Yeah.
There's two potential areas over there in this.
Yeah, absolutely.
In this section.
The last low or my area that I brought.
And neither of them are wrong. It could retest either of them, either of those areas.
Sure.
Whatever. Yeah, watch the real-time action.
Or it can pierce in and then.
Good. So you just don't want it to really go up and make another new high.
Yeah, sure.
From the previous high. Then it's just choppy and messy. You don't want that.
Yeah. That would be invalid for me because then it's no longer a clean wedge.
Yeah, no longer clean. That's right.
Okay. Yeah, easy. And last one. Is this area and my I would explain it as you always say, it got teeth. So it is a consolidation, but it's totally a mess. And then it's, of course, it's decided that it goes in one direction straight. So I think, or in my mind, you wouldn't even look at this.
Well, don't look at it while it's got teeth, but once it gets away from that area, basically a breakout.
Yes.
Yeah, starts to break out, right? You identify where is it breaking out, where's the breakout level, then look at it. Then it could potentially become clean. Because all consolidations are choppy mess, right? All of them. Every time. You don't want to be part of that.
Yeah. But of course, it's for us, it's interesting, very interesting when it's very, very, very tight because of the risk reward, right?
Yeah. If the risk reward is not working, then don't take it, even if the setup is perfect.
Yeah.
Just leave it alone.
That was my question, because this is when I I don't know, make the stop loss here and enter here. This is nonsense.
No, it's a 30-minute chart. You can look at the consolidation, identify the breakout area, then go into the 1 minute and see if you get a retest of the breakout. Same thing that we did before. There you go. So you have that consolidation zone. Watch for the genuine breakout. Wait for the retest. Looks like it did give you one. It's a bit of a tricky one to identify it. I think overall, even the 1 minute chart is very difficult to read. I don't think I would be able to find an entry on this.
Yeah.
Yeah, so very complicated. So just leave it alone.
Because you have here this, it doesn't get to this point. Then it goes here, and then maybe here.
Maybe that area, you get the bearish candle after that, and it's tricky. It's because it's so
but this is also long, and then you enter here, and then the stop loss should be here.
Yeah, you see how difficult it is. You're not sure where to enter, not sure where to stop, so don't waste your time. If it looks like this,
okay. My question was just if I think about you and question myself if you even would look at this, because it's very wide and it has teeth.
Yeah, mostly I don't think I'd look at this for more than 2 seconds. I'd just leave it alone.
Because this is why I don't took a trade here. I just watched it and then
don't look at it. It's a mess. It can jump around in any direction, right? And it's showing you that. So. So don't waste your time.
Sure. Okay. Yeah, this is it for me. So we don't discuss the targets because the setups wasn't nearly there. Am I right?
Yeah. Well, targets are very simple. You got levels. You know how to find them. Just use levels as targets.
Yeah.
Just put the
and then be a little bit conservative and take it a little bit.
Yeah. Just a little conservative, and you'll be fine.
Sure.
You'll be fine. Yeah. Cool.
Yeah. So that's it for me. So I'm just going with the MES and the MNQ and watch the videos and be more precise.
Yes. Be more precise about the setups you're looking for. Check out the videos and the documents on these. They're very, very straightforward and simple. But you got to make sure you really got the context right and you know exactly what to look for. And then you'll notice that most of the time you don't trade. It's maybe a couple of times in a day, very few, 2 or 3. That's about it. That's all you really need.
Yeah.
Cool, man. Good. You're well on your way. You got this going.
Yeah, absolutely. Time will take time.
Yeah. All good, man. Good. Well, get ready for the open now. We open in what, 30 minutes or so? 30 minutes.
Yeah. Don't bother looking at the open.
Yeah, there you go. Good.
My time is for me at 8, 9, 10 a.m. So for you this is 3.
5 to
this is 5 to 8 or something. Because as you said in the last videos, and I noticed this by myself, and the movements after New York Stock Exchange opened, this is hard to predict in my case.
That's not worth your time. It's not for real traders. That's all just for all these guys who are excited on the internet and they think they want to trade, but they're really just gambling. They don't know what to do. So leave it alone. Let people do what they want. And do you really want to make money? You got to step back from all that nonsense and get real about it.
Yeah, no problem for me. I discussed. I saw this with my eyes, and then you said this is what you think about it, and then I just drop it. No problem for me. Okay.
Good.
Yeah. Thank you so much, and thank you for your time.
Sure, Martin. Anytime. You take it easy. I'll talk to you soon. All right.
Bye.
See ya. Bye.